Hello everyone, very good morning and welcome to this live session regarding the general awareness topic for the upcoming SEBI Securities and Exchange Board of India examination grade A for the assistant manager post. Hope your preparation for this examination is going on well. So to boost on your preparation, we have come up with the general awareness topic session for the SEBI examination grade A assistant manager post. Right, so shall we start? Yes. So hope you can see my screen. So I'll be talking about the SEBI examination. So SEBI examination grade A, the post name is assistant manager post. In the general category, any graduate can apply, right? Around 80 plus posts are there. So it has three phases. The phase 1 is again online examination. The phase 2 is again online examination, and the phase 3 is the interview. Okay. So phase 1 carries 200 marks. Let's see what does phase 1 has. The phase 1 has topics like quant, reasoning, English, general awareness, and awareness about securities market or securities market. Each is of 40 marks. Okay, each section is of 40 marks. So total of 200 marks is the phase 1 online examination. Marks, and you have to attempt the examination in 120 minutes. Okay, so clear. So 40 marks for each section. We have 5 sections in phase 1, totally of 200 marks. So now we will be dealing with general awareness. In the next session we'll deal about, I'll just touch the basics of securities market in this session. I'll deal with the securities market in the next session in detail. So in the first section I'll deal with the general awareness section. So what to study for the phase 1 of general awareness. So coming to general awareness, it is similar to general of a bank examination, of any bank exam. So what does general awareness has? National and international news, yes, appointments, awards, business or finance news, yes. Next we have sports news. So all these are related to current affairs, right? So along with current affairs, we need to have an idea about the static GK or static GA, which is always static, like wildlife sanctuaries, national parks, schemes related to government. Okay, so clear. So clear about what are the topics in general awareness. It has 40 marks in the phase 1. Yes, you can easily crack if you are preparing for the bank examinations, general awareness. Okay, and you need to be aware of at least 3 to 4 months current affairs. Okay, so clear about general awareness. This we are taking up regular classes at talentsprint.com. Yes, you can become a student. If you are not, on TalentSprint. So now I'll take up the basics of, first I'll deal with the basics of securities market in India. So what do you mean by a securities market? Generally, what do you mean by a market first? So market is nothing but it is a place where buyers and sellers of different products meet. Yes, whether it is offline or online. So if I say vegetable market means buyers and sellers of vegetables meet. If I say shares market means buyers and sellers of shares. If I say money market means borrowers and lenders of money will meet. There are two types of markets generally coming to finance. The first is money market and the second is capital market. So what do you mean by money market? Here the borrowing or lending takes place within less than 1 year, that is up to 364 days. If I borrow or lend money within 364 days, that is called money market, and same thing if it happens more than 1 year, it is capital market. Understood everyone? So money market means the borrowing or lending takes place within 1 year, and capital market means it takes place above 1 year. That means you are borrowing more than 1 year. It is short term lending, money market, it is long term lending. So now we are more interested about capital market, and who is the regulator of capital market in India? The regulator is SEBI. Yes, the money market regulator is RBI in India. So money market regulator is RBI and capital market regulator is SEBI. Okay, now moving on to the capital market, we shall deal with the basics of capital market first. So we have known what is capital market, what is its definition. So money is lent or borrowed for more than 1 year. Okay, so it means long term lending. Clear? So as it is long term lending, the capital market regulator in India particularly is SEBI. So I'll come to this SEBI, NSE, BSE later. First I'll deal with what is capital market, what is going on in capital market. So first you need to know the definitions of most of the things. You need to know the terms definition. First, what is a share? So before I start what is a share, I'll tell you a small example. Suppose there is a company X. Yes, it is just a startup company, wants to make money for its production or needs capital for its production. So it wants to enter the stock exchange and it wants money from the lenders who can lend in the stock market. So it will enter the stock market now. Applies with SEBI, stating all the details. So after seeing the details, going on all the details and KYC details, so SEBI will grant permission. Or any, so then this is called as listing of a company. So when SEBI grants permission to a company to list its shares on a stock exchange, this is called listing. If it removes any company, it is called a delisting. Okay, so listing means granting permission by SEBI to list a company on a stock exchange. So now the company X issues shares, example of rupees 10 each. How many quantity? Suppose 10 quantity. Example I am saying. Okay. So 10 into 10, how much is the value now? So rupees 100 is the value. So 10 shares, value is 10 rupees. So share means when you are, suppose 10 people have bought these shares of 10 rupees 10 value, then they will become the shareholders of the company. So what do you mean by shareholders? Share is nothing but it is a part of investment in the company. Understood? So person who is buying a share is called as shareholder. Clear with this? Next. Then what is a stock exchange? Where the shares of different companies are listed by the capital market regulator. Here for India it is SEBI. Okay, so that is a stock exchange. Understood everyone? Next we shall see what is dividend. So dividend is nothing but whenever the company earns profits, the profits must be shared among the shareholders of the company because they have invested in the company or not. So dividend will be divided based on the shareholding pattern. Understood? Yes. So how the dividends are divided? So let's see how the dividends are. Suppose a person A is holding 10% shares, B is holding 5% shares. So 10% of the total profit will be given as dividend to the person A. 5% shares holding, he will get 5% of the dividend declared. Understood everyone? Yes, sometimes the company may give uniform shares. Okay, per share they will give you, or they may give you how many shares you are getting, you will get the value of the shares. Understood how dividend is divided? How you are holding the share, in the same way you will get the dividend as per your holding of the shares. Understood everyone? Next. So we have seen shares. So now we shall see what are the types of shares. Generally shares are also called as equities. What do you mean by equity? Equities are also same thing. It is a part of investment in the company. So types of shares we will see: ordinary shares, preferential shares, yes, non-voting shares, okay. These are the general. Ordinary shares, you know, these are the normal shares which are given to general public or to everyone. What do you mean by preferential? As the name says, preferential means a partial. So partial means the dividends are declared first to these people. So generally a company has preferential shareholders and ordinary shareholders. So first dividends will be declared or given to preferential shareholders, and lastly the ordinary shareholders will get these dividends after the preferential shareholders have got the money. Clear? So that's why they are called as preferential shareholders. Okay, they may be company employees, they may be board of members of the company, etc. So non-voting shares mean there is no voting right. Generally these are given to normal public. Board of members have voting rights, generally normal public doesn't have voting rights. Okay, next. Then somebody asks, what is rights issues? Yes, rights issues are also types of shares. So rights issues are nothing but, let me take another slide. So rights issues, these are the shares issued by the company to make larger profits. So generally, suppose there is a company X, everyone is a shareholder, there are some lakhs of shareholders or crores of shareholders, 1 crore shareholders. All 1 crore shareholders will not be active, but there are suppose 10,000 shareholders are very active. Whenever I issue extra shares, they will buy as soon as possible. So instead of giving extra shares to 1 crore shareholders, I will give extra shares to 10,000 shareholders only, so that they will buy my shares as soon as possible. So that's why these rights issues are preferred by the companies to make larger amounts of money in a shorter span of time. Understood? Yes? Next. Next, what does companies do generally with the shares? So first type of action done by the companies is a stock split. So what do you mean by stock split? Suppose there is a share of 100 rupees share. A person is holding 100 rupees share. So this can be divided into 50-50. So you will get 2 shares, or this can be divided into 25 each. You will get 4 shares. So this is called a stock split. Understood everyone? So that a normal person can buy the share. Instead of keeping it 100 rupees, I am keeping it 50 rupees. So 2 people can buy it. Now 4 people can buy it. Understood stock split? Next is buyback. So recently L&T company has bought back some shares, right? So we have heard in news. What is buyback? If the company buys back the redeemable shares, then it is called as buyback. So what do you mean by going to stock exchange? That means you are going to, what do you mean by going to stock exchange? You are going public, right? So there are what are the types of issuing of shares? There are 2 types of issuing of shares. The first is IPO, second is FPO. Yes, what do you mean by IPO? Initial public offering. And next is follow on public offering or offer. So what do you mean by IPO? Redeemable shares means those which can be bought back by the companies. Those are called redeemable shares. Okay, suppose you have a redeemable share, the company may take away your share and give you some money. Okay, so what do you mean by IPO? IPO means new shares are sold or bought on the stock exchange. That is nothing but IPO. Suppose I want to go to stock exchange. After getting listed on the stock exchange, when I first issue my shares, that is called IPO. Understood? Then when I sell or buy existing shares, it is called as FPO. Suppose I have issued my IPO now. When I am going to issue second time the shares, that is called FPO. Even though if I issue new shares, that is called FPO only. That is called follow on public offering. I am going to issue the shares public, that's why it is called as public offer. That means I am offering the public to take share in my company. Understood everyone? Facebook has issued IPOs some 1 or 2 years back, right? So for the first time when it is issuing, it is called IPO. After that it is called FPO, anything. Yes? Understood issuing of shares? Then what is buyback? What is stock split? Yes? Next. Then types of, first we will see what are the types. First we have seen the equities market. Second is a debt or bond market. And third is a derivatives market. So first we have seen equities market, we have seen IPOs. IPOs is nothing but primary market. They deal with fresh issue of new shares. And next is FPOs, it is called as secondary market or after market. Primary market is also called as new issue market. And secondary market is also called as after market. Understood? So understood about basic equities market? Yes. So now we shall see debt or bond market, the second types of capital market. So what do you mean by debt or bond? So generally debt means it is a liability. Yes. So bonds, hope you know about government bonds or normal bonds issued by the private companies or the government companies. So there are, first debt means liability. What do you mean by liability? Suppose, example I say, a deposit is a liability for a bank. Why? Because it has to pay back to the customer whenever he demands with interest. Yes or no? So that's why debt means liability. Suppose I say I have written a bond on a bond paper. I am so and so person has taken 1 lakh from Y person, okay, and will pay 10% interest after some 10 years. Okay, so that means I am liable to the person Y after 10 years to pay back with interest 10%. So that is nothing but a debt or bond market. So there are types of bonds issued generally. Now we shall see what are the types of bonds generally issued. Generally the types of bonds issued are government securities, particularly if it is more than 1 year, it is, sometimes the government security may also be more than 1 year. Generally government securities come under money market only, but if they are more than 1 year, they come under capital market. Second is debentures. So what do you mean by debenture? Debenture is nothing but similar to bonds only. These are the bond instruments used by corporate companies to borrow money from general public at a fixed rate. Mostly they will borrow at fixed rate of interest, because general public doesn't want floating rate of interest. Okay, so mostly they borrow at fixed rate of interest, the debentures. So there are types of debentures. We have convertible debentures and non-convertible debentures. And next is secured debentures, unsecured debentures. So what do you mean by convertible? That means if a debenture is convertible to a share, it is called as convertible debenture. Okay, I am telling you, somebody asks, are debentures are secure or not? Hope I can answer with this. So debenture, if it is convertible to a share, it is called convertible debenture. If debenture cannot be converted into share, it is called as non-convertible debenture. What do you mean by secured? If it has a collateral or surety. Whenever you take a loan, the bank asks surety or collateral, right? Because they want to get the money back, or else they can auction your properties. So if it doesn't has a collateral or surety, it is unsecured debenture. Clear? Yes. So convertible debenture, non-convertible debenture, secured debenture and unsecured debenture. Clear with this? Yes. Understood everyone? Debentures and bond market, generally they get at fixed rate of interest. Next. Now we shall see the derivative market. So what do you mean by derivative? Somebody asks, personal loan is unsecured, sir. Personal loan is unsecured. You're asking me a question or you're concluding the statement? Please confirm. So let me go with derivative. So what do you mean by derivative? Derivative market is nothing but similar to betting market. I say it is betting market. Why I call it as betting market, I will say. Suppose there is a company X. We know equities market, companies X, and company X shares are brought by some person A. So these two people are happy. Company X is happy that person A has bought the shares. Person A is happy that he has bought the shares for some value, right? So there will be a person Y watching from here, both of them. Like cricket betting match, two teams are playing the cricket, but some people will be doing betting, yes or no? Person or groups watching these two people, yes? Yes or no? So there are two people here, Y and Z. Y says to Z that today the share will rise, and Z says to Y that today the share will decrease, or else I'll give you 1,000 rupees or like that. They are doing betting. I'm just saying an example. So the value of these two people is derived from the original asset. Yes or no? The value of one asset is derived from the value of another asset. Such type of asset is called as derivative. Understood? Suppose some person says today it will rain, another person says today it will not rain. So understood? So raining is the original asset. So people are deriving their value with the value of the original asset. Okay, clear? Understood? So generally the general type of derivative market is, example of derivatives market is commodities market. So it is not like a vegetable market where, so example commodities are indices, rainfall, temperature, physical goods like tomatoes, onions, oil, etc. So all these are derivatives. They derive their value because of another asset. Okay, I'll discuss MCQs later. First I'll go through the topics, because most of you are not aware of stock exchange because they think that it is risky in nature. Nobody can predict the stock market exactly what happens today. Okay, so these are derivatives. Okay, they derive their asset based on other asset. So what are the general commodities market we have in India? We have generally we trade in physical goods like tomatoes, onions, pulses, etc. We have multi-commodity exchange, multi-commodity derivative exchange. These are commodity trading. Here you will not buy any commodity or tomatoes or pulses. You will trade on the value of the commodity. Understood everyone? Yes. So here you will trade on the value of the commodity instead of buying the commodity. Understood? So this commodities market is generally regulated by, earlier it used to be regulated by Forwards Markets Commission, FMC. So as there was a scam, so now commodities market has also come under SEBI. Now the total capital market regulator is SEBI only. Understood? Now I'll tell what is forwards, futures, etc. Okay, understood? So now we shall see what is the terminology in the derivative market. So in the derivative market, general terminology is forwards and futures. So generally derivative market means it is a contract between two people or more than two people. Contract. So first I will say what is forwards. So forwards means it is a contract to buy or sell an equity or anything, any share, etc. on a specified date at a specified price. That means date and price are fixed. Understood? That is called forwards contract. What do you mean by future? There is a specified price, but there is no specified date. I'll say I'll buy in December. I'm not exactly saying on what date I'll buy or what day I'll buy it. So understood derivative market? Forwards and futures. Forwards is we have specified date and price, and futures we doesn't have specified date. There is no specified date, but we have specified price. So understood what is forwards and futures? Earlier this derivative market used to be under Forwards Market Commission. It was a regulator of derivative market in India. Now FMC is also under SEBI now. So derivative market is nothing but it is a contract. Yes, so forwards and futures. Again we have some more terminology in the derivative market. We have call option, and put options. Options, we call them as options. So call means nothing but buy. Put means we are putting it for sale or sell it. Understood? Yes. So call option means buy, put option means sale or sell. We have sometimes swaps also. So what do you mean by swap? Recently India has signed with currency swaps. We have currency is also traded in the derivative market. Currency futures, currency forwards. Okay. So currencies are swapped. So recently example is India and Japan have signed around, I think, $75 billion currency swap agreement. That means they'll use only their currencies. They'll not use any other dollar or pound etc. in the middle to swap their currencies. Understood? Yes? Okay? Clear? Understood or not? Next. So there are a lot of terminologies. First, whenever there are some types of capitals, I'll let you know. What is authorized capital? Paid capital. Yes. So what do you mean by authorized capital? Paid up capital, sorry. So paid up capital means, somebody asks, what is swaps? So what is swap? Currencies are swapped here. Currencies are swapped. Suppose I am buying $1 today. So if I want to swap it with rupee, if I am buying rupee now, the value of the rupee will rise. If I am buying dollar, the value of rupee will go down and the value of dollar will increase. Understood? Yes. So authorized capital means the capital agreed. Authorized capital means the capital agreed by the company. It wants to borrow from the stock exchange in the overall lifetime. Suppose example, the company says I want to get 1 crore in the total lifetime. So this is an exchange contract signed with the SEBI saying the company, I want to borrow 1 crore sir from the total stock exchange in the lifetime of my company. Then after signing the agreement with the SEBI, I will issue only 10 lakh worth shares. IPOs. For the first time I will not issue 1 crore at a time, right? So 10 lakh worth shares I have issued on the stock exchange, then that is called issued capital. Now out of the 10 lakh worth shares, only 3 lakh shares are bought and paid by the shareholders. Understood what is authorized capital, what is issued capital, what is paid up capital? Yes. So first, authorized capital means as per the agreement with the SEBI, the total amount I want to make entering the stock exchange, that is called authorized capital. Issued capital is how much worth shares I have issued, and paid up capital means how much worth shares are bought actually by the shareholders of the company. Understood what is authorized capital, issued capital and paid up capital. Understood what is the terminology? Next. MCAP, we generally see TCS has crossed 7 lakh market capitalization. What do you mean by market capitalization? So market capitalization is nothing but the number of shares multiplied by their value is nothing but M cap. We have small cap types, small cap, mid cap or middle cap, and large cap. Different stock exchanges have different values: small cap, mid cap, large cap, etc. Okay, somebody asks how that remaining capital they will get, sir. They will be bought later. Okay, they can take back their shares also if they want to do. Everyone will not buy on the first day itself, right? So what do you mean by M cap? Market capitalizations. Recently Reliance Industries has caused 8 lakh crores market capitalization. It's first to do so on the Indian Stock Exchange. Understood? So market capitalization means number of shares into their value is nothing but the market capitalization. Okay, somebody asks if authorized capital is very higher than, in the agreement itself we have to state what is the authorized capital. If you exceed your authorized capital on issuing the shares, you will be delisted by SEBI. Understood? Yes. Next, so next we'll see the types of investors. Generally we have the domestic investors who are issuing from the home country, native or home country investors. Next we have foreign investors. We generally call them as foreign institutional investors who are registered with the capital market regulator. Okay, they are also called FPIs also. Somebody asked, can we increase the authorized capital? Yes, we can increase, but after informing our capital market regulator. Why capital market comes into place, regulator comes into place? Because suppose the company shuts down, where does the investors go? To the capital market regulator only, like RBI. Okay, foreign institutional investors or foreign portfolios investors, everything is same. They are registered with the capital market regulator. Here it is SEBI. Okay, they invest in the Indian stock exchanges. So there are types of investments made by the foreign investors generally. What are the types of investments made? IDRs, Indian Depository Receipts. ADRs, American Depository Receipts. GDRs, Global Depository Receipts. So what do you mean by IDRs, ADRs, GDRs? So IDRs means, as it says, Indians. Suppose if a foreign investor wants to invest on Indian stock exchanges, he can do so through the IDRs, Indian Depository Receipts. So same thing, if I want to invest on American stock exchanges, I need ADRs. If I want to invest on global stock exchanges, I need GDRs. Understood, everyone? So with these GDRs means these are permission letters so that you can invest on the respective stock exchanges. And there is one more term called participatory notes. Or P notes. So what do you mean by P notes? So these are not any currency. These are issued by registered foreign investors to any others to invest or participate on behalf of them on Indian stock exchanges. Understood? So instead of regular people, I am giving permission to others to invest on Indian stock exchanges. So those documents are called as P notes. So with these notes, they will dump money into Indian stock exchanges. Money will be dumped. So SEBI takes action on P notes because they are irregular and illegal in nature. Because as you are registered, you have to invest. Instead of you investing in the firm, you are giving permission to others. So those are called as participatory notes. Understood, everyone? Now somebody asked how the value of share is increased. Now I'll come to stock exchanges. So stock exchange has an index. What is this index? We see Sensex, Nifty, yes or no? So what is this index? Index is nothing but it is the average. Remember, it is an average of all the companies' shares listed on it. Suppose if I say example, Bombay Stock Exchange has its index called BSE Sensex. Its full form is sensitive index. It is a group of 30 companies, topmost companies, which are chosen by SEBI only. Okay, so what are these 30 companies? When I do average of these 30 company shares, I will get the value of Sensex. If I want to get example Nifty, National Stock Exchange has its stock index Nifty. Nifty is an acronym or something like 50. It is a group of 50 companies. Sensex is a group of 30 companies. Nifty is a grouping of 50 companies. Okay, when I do the average of 50 companies, now it is trading around 10,000 points, right? So average of those 50 companies is that 10,000 points. Understood, everyone? Average of those 30 companies is currently trading around 36,000 or 37,000. So BSE Sensex. So average of those 30 companies is the Sensex value. Understood, everyone? Now we shall see the stock exchanges. First is, we'll go for the capital market regulator, SEBI. So SEBI stands for Securities and Exchange Board of India. So when was it established? It was established in 1988. But it was made a statutory body. That means it has an act of parliament through SEBI Act of 1992. So it was made a statutory body in the year 1992. Understood? Who is the present chairman? Present chairman is Ajay Tyagi. It has members or the other members too, part-time members, full-time members, etc. Okay, so what is its role? It is a capital market regulator. So why it is regulating everything in India? So that the investors can invest and make money safely, and the companies can borrow on a long-term basis again safely. So investors and the companies have to be profitable in the capital market. That is the main role of SEBI, so that there is no illegal activities going on the capital market. Understood, everyone? And where is its headquarters? Its headquarters is at Mumbai. So Ajay Tyagi is the chairman of SEBI. So understood the capital market regulator. Next is Bombay Stock Exchange. So the earlier name of Bombay Stock Exchange is the Native Share and Stockbrokers Association. Native Share and Stockbrokers Association is the name. It was established in 1875, the oldest in Asia. Okay, and who is the present chairman? Present chairman is S. Ravi, and present MD and CEO is Ashish Kumar Chauhan. Okay, clear? Its headquarters is at Dalal Street. Dalals means brokers. Earlier they used to gather at this place. It is very nearby to Gateway of India in Mumbai. Okay, clear? The building which is shown generally is of Bombay Stock Exchange only. So understood? So it has Bombay Stock Exchange has around 5,700 plus listings. That means those many companies are present. Its indices are Bombay Stock Exchange Sensex 100. 100 means again 100 more companies, 200, 500, like that. Okay, any company may involve in any of the indices multiple number of times. So Sensex is a grouping of top 30 companies. Top 30 companies. Okay, so when you make the average of those 30 companies, you will get the Bombay Stock Exchange Sensex value. Understood, everyone? And it has a subsidiaries like BSc Institute. It is particularly the training institute in stock market, and CDSL, Central Depository Services Limited. So what do you mean by depository services? Stores the data of or shareholders and companies of BSE. So whoever buys the shares of BSE or whoever lists the shares on BSE, their data will be stored in the electronic form by CDSL. Particularly this is for Bombay Stock Exchange. Understood, everyone? Somebody asks, what is BSE Sensex 100? 100 means only 100 companies only, not 30 plus 100. Remember, 100 means only 100 companies, and it may include the Sensex, BSE Sensex companies also. Okay, understood, everyone? Yes. Next, moving on to NSE. It is a National Stock Exchange. BSE is an older one. It was established in the year 1992. Its present chairman is Ashok Chawla, and its MD and CEO is Vikram Limaye. And its headquarters is again Mumbai. Okay, and it has around listings 1670 plus listings. That means those many companies are traded. The indices of NSE are, first one is NSE Nifty. So Nifty means it is a group of 50 companies. Again we have Nifty Junior, Nifty 500, Nifty 200, etc. Okay. Clear about National Stock Exchange? So Nifty is nothing but Nifty 50. It was an acronym, so instead of using 50 they have used Nifty for National Stock Exchange. Okay. So understood everyone? Next, generally we see what is called, we hear or see the DMAT account. So what do you mean by DMAT? So DMAT means a dematerialized account maintained only in electronic form. So why only in electronic form? Why not in physical forms? So what are the advantages we have maintaining only in electronic form? There will be no theft. If you use any physical or paper form, suppose the company says you have bought 10 shares and you have maintained on paper. So that the paper may be lost. No catching of fire or, yes. So these are the better advantages when you maintain the account in electronic form, so that the companies will be easy and you will be trading lot of shares for lot of companies. So having lot of papers with you will be difficult for you to maintain. Okay. Sorry, I have not told about NSDL, right? And its subsidiaries are NSDL, National Securities Depository Limited. Again same thing happens, it stores the data of, so remember the full forms are very important, abbreviations are very important. National Securities Depository Limited is a full form and it maintains the form shares of National Stock Exchange. So what is the better advantage in DMAT account? The better advantage is you will maintain only in electronic form, and these DMAT accounts data will be maintained by the respective subsidiaries of the exchanges. Understood? Yes. And there are clearing corporations also, like what do you mean by clearing corporations? So clearing corporations authorize the transactions of the stock exchanges. Okay. So understood everyone? So with this I'll conclude this session. I'll come up with the more advanced session next time. So thank you so much for joining. Hope your doubts are cleared regarding the basics of general awareness and awareness regarding securities market. Understood? So somebody asked, please explain what is listing. Listing means when you get the permission to trade on a stock exchange, it is called listing. And when if you carry out illegal activities, or if SEBI wants to delist you, that is called a delisting. When you are removed from a stock exchange, it is called delisting. Listing means when you are entering the stock exchange. Delisting means when you want to come out of the stock exchange, or when you are removed from the capital market regulator. So thank you so much for joining. I'll meet you next time. Practice. Bye.